Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. Today, we want to talk again for the second time this month to Taj Singh, the CEO of Discovery Silver. Taj, good morning to Toronto. How are you doing, my friend?
Good day, Johan. Doing very well.
Yeah, I can imagine that. Me too here, because first of all, I'm a shareholder of your company, but secondly, you reported a real monster resource. I really cannot say that different. And I love it because you always said that in our interviews that you want to drill this out, you want to bring that up, you want to show us a real big resource. And this is only for just one open pit. We talk about 910 million ounces silver equivalent in the measured and indicated, which is fantastic. And also in the inferred resource, you have 140 million ounces here for Cordero. This is absolutely phenomenal, I must say, and we should really emphasize on this is open pittable, and there are not that many open pit silver projects in the world. So please give us your thoughts on that.
Beautiful, thank you, Johan. Yeah, you hit it right on. There is really out of the top 10 silver mines, I believe 9 of them are underground. Silver is just by its nature, often comes with other metals. We know that that's how silver behaves, but also is typically in vein style, underground style deposits. We are one of the very few primary silver open pit projects in the world. There's not many at all, and we've always talked about the characteristics that we think make Cordero stand out, and it's margin, size, and scalability. And margin and size is a little bit harder to get with underground, but margin, of course, you have if you have some very high grades that we've seen from several companies. But the margin and size combination is very hard to get. Then if you combine that with scalability, it's just extremely hard to get that in an underground mine. The scalability speaks to the fact that if silver price goes to 30, Johan, and tomorrow or whatever down the road, we can get bigger because there's a high grade core, there's a medium grade, there's lower. You keep getting larger and larger and larger to the point that honestly, when you start talking about in the 30s, the whole deposit, this monster resource you saw, all of it is completely economic and makes loads of money. The thing is, at this current silver price, I want to note that the resource that we showed was a mega kind of in terms of number of ounces. We're going to pick a high grade subset of that and really focus on that to really optimize the economics. But we wanted to show what this resource could be, so we showed the bigger resource, but we also in the resource showed different cutoffs, and I wanted to highlight that. The two major things that were huge positive surprises for us was the amount of measured and indicated. You have 90%, close to 90% of your resources measured and indicated, which is fantastic. It speaks to how much this project has been advanced. And secondly, the fact that over 60% of the high grade of the ounces, are in the high grade. So that was something we were looking to prove, and we really did think we proved it here.
Absolutely. First of all, I was also a bit astonished that the market reacted not immediately, I would say. Now your stock went up, I think something like 20% the last days. But can we put it a bit into context? Because one might think 48 grams silver equivalent is not, let's say, that great you wanted to see or investors wanted to see. But I think we have to put this really into the context that this is open pit, as you mentioned it already, on the one hand, and on the other hand, that this that you have, of course, silver, gold, lead, and zinc, and I think you have not even yet calculated lead and zinc into that. And so from that perspective, it must be still very, very economic then. And when do you want to release some numbers on that, on a PEA?
So the PEA, as we've guided to, is coming out in November, on the second half of November. You talked about grade, and again, it speaks to my answer in the first question was we wanted to show the big resource, that if silver went up, that would all become part of the mine plan, or a vast majority of it. But again, for kind of current silver prices, we're going to take the best subset of that, right? And we're really going to focus on kind of grades, especially in the main part of the mine life of 100 gram per ton, kind of is what we're looking at silver equivalent. If you kind of translate that into gold equivalent, right? And you assume, say, a 60-to-1 ratio or 65-to-1 ratio, you're talking about 1.6, 1.7, 1.8 gram per ton gold deposit. Strip ratio, very important, 1-to-1. is of the bigger pit. But again, it's that combination of strip ratio and actually a very good grade in the core that's really going to make, we think this project very favorable and gives it very good potential. But it's important to note, again, silver, you're used to seeing higher grades, that those are underground deposits. So it's important to note
Definitely.
Operating costs in the underground are $200, $300 a ton. For open pit, they could be, $5 to $10 to $15 a ton at most. So it's a big difference. So people need to put that into context when they look at grades. It's often helpful to switch it into gold and go, oh wait, a gold project that's 1.2, 1.3 gram per ton gold with such a low strip ratio would be fantastic. It sometimes is easier for people to think like that. So honestly, Johan, when the PEA comes out and the economics are laid out, it's going to be pretty obvious. And those people who've done the work who pretty much see the potential for this. And that's why the resource was put out. You saw a decent effect, but it kind of was slow. And then as people did work, we saw a lot more kind of interest and support with the stock price.
Okay, super. I saw also a calculation like here that you have used different NSRs. So we are used in an NSR, net smelter return, that somebody has to pay for something. But you mean this in the sense that you are receiving the money, because just to put that into the context, because we had two viewers who asked me and said, listen, net smelter return what is that in the context here now? And I said, yeah, this is what they really get then finally. What is the minimum you need to receive, which is the cutoff, right?
An NSR cutoff, that's a good point. NSR cutoff, Johan, is different from what was done before and what is done typically in a straight gold deposit. It's usually a gold grade. That's your minimum gold grade you will mine to. And everything above that will be considered, ore that you make money on. In a polymetallic deposit, often use an NSR cutoff. An NSR cutoff is basically saying it's a dollar value per ton, and it's saying anything that is worth more than this value per ton is ore and will make money. So, for example, for the sulfides, our cost is $720. Our base case NSR cutoff is $725 per ton. It doesn't consider mining costs because you would have mined anyway. It only considers processing and G&A. That's a typical standard, industry standard. But what it means is any ore that has an NSR value. NSR value means it's not only just the grade and the dollar value of that grade. That would be gross value. It's not gross value. It includes recovery, payability, treatment charges, everything. So what's that value? Okay. And per ton now, what is that value? And as long as it passes 725, it's now considered ore and it's part of the resource. If it's under that, it's waste. Now, if silver price is lower than it is today, you're going to increase your cutoff because you need a higher cutoff to make money, to basically break even. So that cutoff you see basically is a break even number. So everything above that is considered economic.
Yeah, exactly. Okay, super. Can you give us also a bit more insight, let's say, in the difference that on the one hand, you have this huge sulfide resource, and on the other side, you have the oxide transition resource. And as far as I understand, this is the oxide transition resource is the real high grade here in that sense, right? So is that probably that kind of you start first to mine?
Yeah, so the oxide transition resource is not the high grade. The high grade's in the sulfide. Just wanted to point that out. The grades are very good in the oxide and transition. But what is to note is that the oxide is stuff that you would have stripped off to get to the sulfide. The sulfide is the main part of the deposit. 95% of the deposit is the value of it is going to be in the sulfides. But the interesting thing about the oxides is that it was something that would have been a cost. It would have been stripped. We've now turned it into profit, in some cases very substantial. And to your point exactly, some of the silver grades are actually very high in the oxide material. And in the oxide material, we only consider silver and gold in the resource. As you noted before, base metals are not considered because the processing we're going to be using for that is heap leaching. And you heap leach gold and silver, the base metals don't get recovered by heap leaching. But that basically, the reason for the oxide resource that it's important, even though it's not sizable, is its early stage cash flow And again, it's turning basically what would have been a cost into a profit. And so you'll start your mine with doing heap leaching. You're going to use the same kind of crushing equipment that you would have later on used for the sulfide. You've already put the capex in. You start generating early cash flow, maybe 1.5 years earlier than you normally would have. And then you move into the sulfides as the oxides are finish up. So it really dovetails quite nicely into processing the oxides. And especially they're at surface, starting at surface, you get your cash flow early, and then you move into the sulfides, which are just below it.
Yeah. Okay. So can you process then later on the base metals? Because I understand they are still a substantial part of the whole ore, right?
Yeah. For the heap leach material, we are not considering the base metals to be recovered from the oxide material. It's just gold and silver. To be honest, the base metal values, if you see them, are actually lower than in the sulfide material. The base metal values are lower in the oxide and transition material. So yes, there is some value. That is still sitting in there, but we're not assuming you'll process it. And the bulk of the value of the oxide transition is in the precious metals, which we can recover from.
Absolutely. Super. Can you give us also some insights into metallurgy? Because you have done already a lot of tests, of course, and as far as I know, it was quite good. But have you tested any further now? Can you give us an update on that?
Really, I think we spoke a couple of weeks ago, Johan, did an interview. That's really the state of our metallurgy at this point. We're now actually pulling samples to begin metallurgical testing for the PFS. So we're going to increase the level of detail further. And as we now know what the mine plan might start looking like, even not only for the PEA, but what they might look like for the PFS, we're going to start selecting metallurgical samples to begin further testing. But what's going to be contemplated in this PEA, everything that is in there was included in the press release that was released in September.
Okay, so how many more, let's say, work and drilling do you have to do, to get reserves out of that for the feasibility then?
Well, the reserves, Johan, is basically when I have a PFS, anything that's in measured and indicated becomes a reserve. So anything that you're seeing measured and indicated will move into the reserves category, but it needs a PFS to support it because the costs need to be in more detail, more confidence in the cost. Yeah.
Okay.
But that was a very important point, is the measured and indicated, the percentage of it as the total resource. But then even as you get into the higher grade subsets, it even goes up further. It really is speaking to how advanced the project is, how much it's been drilled.
Okay, super. So you said November we will have the PEA, and then we see some real numbers.
Yeah, it's obviously been interesting to be able to have a vision of this project and talk about it over the past couple of years with investors. But it's been difficult because you don't really have a study to base it on. So it's going to be very helpful to be able to tell the story now with our own work done on it, our own numbers. It will be, and it's a completely different project as we've always talked about, Johan, from before.
Absolutely.
So, yeah. And yeah, so it's coming out, and we're excited to be putting it out.
Super, perfect. Then let's leave it with that. And I have a good feeling that we talk at least in the next 4 weeks again. And we really look forward to that PEA. And I really keep fingers crossed that you can show us fantastic economics. My feeling is they will be very good as far what I saw and what I read through, and also talking to you. So we are really, really eager to see that.
Perfect. And just to wrap up, it's a little challenging because I've talked about, we've shown the bigger resource, and we're actually looking at a higher grade subset of that to be the mine plan. Really, we put it in the release, and it's important to know we're really focusing. Our targets are kind of a minimum of 15-year mine life, Johan. 15 million ounces of silver equivalent a year, at least. And cash costs, important to know, is in the lowest half of the industry cost curve. So, 10 to 12. So we really think people are going to be, that can, again, it gives people some guidance on what to expect. And these are some targets we've had. So looking forward to moving forward.
Absolutely. Me too. Yeah. Super. Yeah. Let's talk then about it. And as said, we are really Excited to get those numbers really now then black on white, meaning written on a paper. And then let's talk again. Super. Taj, thank you very much. All the best and keep safe.
Thank you very much.
Thank you. Yeah, ladies and gentlemen, that was Taj Singh, the CEO of Discovery Silver, and you heard it. Monster resource, over 1 billion ounce of silver equivalent. This is outstanding, one of the largest resources here in the world by now in Mexico with the Cordero project. Within the next 4 weeks, they will bring out the PEA. Then we really see the first real calculated numbers with real assumptions for the metal prices, costs, etc. And then I have a very good feeling that this stock will really rock further because as far as what I saw and what they have done, I have a very good feeling that this PEA will be very good. So Taj and the team did a great job. I hope you own Discovery Silver. If not, still time to buy. I am a shareholder too. So stay safe. Thanks for watching us and bye-bye from Switzerland.